All right. Let's get going. Just got done doing the live stream prep for non-farm payroll Friday, so let's get into part 2 where we take a look at the daily for our hourly chart and beyond to tackle charting NASDAQ for high time frame to lower time frame. And let's go to the charts. So we left off here where we had our monthly levels, we had our weekly levels, and now we are looking for our near-term weekly levels, and now we're looking at our daily levels here. So during the session, I charted out this daily high that you see here, the swing high, and this daily short-term low as well. So those lows are going to be referred to, same as these highs will be referred to. And this is within the previous few days. Now, this high is a little bit closer than this intermediate term low, and we haven't traded to this low, so this will be of essence if we trade down there. One thing that I do want to recognize is that this area here to here is a discount weekly buy side imbalance. And so if we trade down to this short-term low, we will likely trade down to this buy side imbalance. Price does not need to head further, but we can certainly see it go down even further into optimal trade entry as there is a bullish order block here. In fact, it can go all the way down to this segment down here as well. But for the time being, we know that the IPDA data ranges, we see our low, immediate low here, immediate high here, and the rest of these ranges have already been referred to by price. So these are the key dealing range that we're operating in at this very moment. Noting that, we can kind of see where our equilibrium is. So dealing range equilibrium happens to be right here, right? What is that value? 151.52, roughly. Let's see, 151.52.25, close enough. It's a very rough guesstimate here. I probably could fix it if I went a little bit more perfect here. Nope, not really. So good enough there. We can treat this as a dealing range, and we will treat this as such, and we will make this a key. Let's see, this will be the discount high, and we'll mark this as the upswing dealing range CE. Or we'll mark this as equilibrium. What happens to be right beneath it is this weekly discount BISI high. So if this were to fail, I want to see this go downwards, right? So we'll leave that on there for the time being. And we know that we'll be able to see that on our lower time frame charts as well. But we'll keep this off to the side just so that it's not immediately messing with our charts. Okay, so our daily levels, this is what we are, this is the range, swing high to swing low, that we are working in right now. This is our consolidation range. We see that we're in this consolidation range as well. Kind of canny how this consolidation range kind of matches up pretty closely with the one above there, right? So we need to get out of that. And what's going to get us out of that? It's going to be non-farm payroll. But non-farm payroll has the power and the manual intervention in order for us to see price move, take out both sides and tell us what direction it wants to move in later, which is kind of key for what we need to do, right? We see that there are buy stops above us, monthly levels, Weekly levels up here as well. And for completeness sake, I really should, it's bugging me to not have this here. So this low of 17024.50, I should have marked that on the weekly before that. That was bugging me for a little bit there. And we'll have to move these so that they're covered by the line so that they're a little bit able to be seen. So this is a premium SIBI high. And now those should be, that should lock this one as well. So back to the daily chart, which is what we're focused on now. You should have this short-term high and this short-term low marked. In the IPDA data range of the last 20 days, we should also be marking this short-term low. Which is 15,207. So now we have this. This was likely going to be referred to later on in our, if we see a downswing. And that is enough for us to refer to on the downside. On the upside, if we take out this short-term high, which is a monthly intermediate term high, there's a weekly bearish order block. There's a weekly premium SIBI low that we could reach to. And all of that we could just blast straight through as well with non-farm payroll. If we are given the opportunity to, it potentially could create higher highs. Within the IPDA data range, we've already knocked out all of this. And so all that's left is this and this and this with some buy side imbalance in discount area as well. So, so we have the capability here to move in either direction. We need non-farm payroll to tell us what's going to happen next. And that is a huge part of what we're looking at on the daily chart here. It doesn't really make sense to chart very much more than this because we need non-farm payroll to tell us what direction it's going to go. We can certainly look on lower time frames and chart everything down here, but let's not clutter the chart until we need to, right? Until we see price starting to head down here, we know that it will aim for these major liquidity areas. We do see bullish order blocks here that have been respected and not even traded to even. So these bullish order blocks, they never were traded to. So we're going to keep that in mind to see if we see movement and we can see any form of breakers, see any continuation here to make these treated as bullish order blocks. And outside of that, we'll leave the rest of the chart pretty clean as we go down to some lower time frames. So let's go down to a 4-hour chart now. So you can see the daily levels marked here. Remember, you have the monthly levels marked here, weekly levels. You have the weekly levels marked out as well over here. Premium BC premium high. And you've got the daily levels that we're in. To the downside, we see those bullish order blocks on the daily that we wanted to mark. We don't mark them just yet, but we do see this daily short-term low. Within this low to this low, there are some 4-hour key levels here. They happen to be weekly levels, so we don't necessarily need to target and write them out because they are covered by this great higher time frame level. When they're so close, you don't need to write out every last little one of them because this will take precedence, right? So you know that there's a previous short-term high here on the weekly level. It could mitigate and bounce higher, or maybe choose that to be a retracement point before it heads lower. Once we break this, once we trade down to this daily short-term low, if we break lower, it could refer to that and then head lower to the premium BISI low here. Once it breaks that, it could head down to a daily short-term low. It just all depends, right? So while we do see a lot of stuff hanging to the downside on a 4-hour chart, we have still seen higher highs, higher lows, 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 lower high, higher lows, higher high, even higher lows. And now we've started to see consolidation break down, lower high, lower low, lower high, lower low, higher high, higher low. And we're in deep in this consolidation range. So again, I referred to this before, because we're in a consolidation range, we need something like non-farm payroll to break us out and show us what direction it wants to trade in next. If we take out sell side stops, chances are we'll aim to take out buy stops next and maybe intermediate term high on the monthly level. So we'll have to see if we build out the rest of this market maker buy model and trade through this larger consolidation and make higher, like all-time highs. That is it on the, we don't want to clutter the sell side yet. We want to see proof that we're going to head lower, and then we can start to look for targets on the sell side. Daily targets are obviously going to go from target to target. We need to see how price trades at those levels, and if it continues lower, we will treat this as a market maker sell model. If it continues higher, we'll treat this as an area of accumulation. And if we see an impulse move higher, we would like it to head back down to the monthly intermediate term high, treat it as a mitigation block and potentially bullish breaker. Look for this bullish breaker here, and then head higher. So case can be made for both sides. We are just looking at the chart right this moment, and there's nothing really for us to chart. We want those daily levels to draw our eyes to either buy side or sell side. Yes, we do have some smaller time frame targets up here, but we'll let non-farm payroll take out everything it needs to and then some, and then we'll have a cleaner price action after this week. So I think that's really it. We could go down to the hourly chart. It won't help us much in this consolidation, right? So this past week, consolidation, consolidation, consolidation. No clear direction, although we have been making higher highs, and we've taken out buy side as well, and we're starting to consolidate the day before non-farm payroll. I have a feeling that both this daily high and this daily low will get taken. Just which side gets taken first will typically dictate what side remains to be seen. I personally would prefer us taking out buy side liquidity to head lower to take out sell side liquidity. Personally, I would prefer that, because then that would allow us to frame, and I want to see us take it out like heavily. I don't want to see us like, dawdle around there. I want to see us take it out and then continue trading lower towards that daily short-term low. It happens to be relative equal lows as well, but on the daily chart, it's one short-term low. So I would prefer seeing that, because there's a singular high up here, and I could treat that as, well, technically there's two relative equal highs up here. I could treat that as a potential run on stops, and then from there we can head lower. Alternatively, because there are a lot of stops down here, we could see price, if we see non-farm payroll trade down first and take out this daily short-term low, I would wait to see if it immediately rebalances, takes out sell stops and immediately rebalances, or if it continues lower. Then that could be also one of those situations where we failed to take out an intermediate term high. We traded down from it. Some folks tried to keep it long, and then the market decided, hey, we're changing directions now. It is going to go fast. there might not be a return back to this as a mitigation block, but I would like to see us return back to there and then head lower. So with that, that kind of concludes part 2 of charting. And once we get through this segment here, we will continue to chart on the hourly and on the daily once we get a little bit more cleaner price action here. So for today though, today we would have had, and we're gonna only keep this on the hourly chart for now, but we would have kept this as a draw on liquidity. We would have seen this from yesterday. So this is all we saw in the morning, right? Or even at the end of the day, this is all we saw. But in the morning, before we woke up at like 7 a.m., we could see this form here, and then our low we could see formed over here. And we can mark this as a, let me see how far this goes. We can mark this as a sell side liquidity. We can mark this as a buy side liquidity. So I'll give you a little bit of a, we'll do a little bit of a market recap because that will help us on the hourly time frame. So rejection block up in this whole area. So this whole segment here is a rejection block. We see price traded up to it today in hindsight, obviously, but we don't know that until later on today, right? So as we see price trade up in London, we expect price, we don't see very much here, but we do expect price to give us something here. We need to go down into the lower time frames to see exactly what, but what could we trade up to? Well, there's a discount bearish order block here. There's a discount bearish order block there. So let's mark those out as well. And actually, we can treat this as relative equal highs. That's one of the ones that I would have thought here. And we will mark that as buy side liquidity as well. This is a potential buy side with this being the bearish order block. So we will consider this as well. And we'll get to the lower time frames in a moment. I want to show you how important these are here. And then of course the rejection block up here, which is coincidentally traded to and through. Okay, so this is on the 60-minute time frame. Let's head down to a 15-minute time frame. So 15-minute time frame, right? What we would have done, and now we're charting this as if we could only see what prices preceded the 7 o'clock a.m. open, right? So we see what do we see? And we see price head down to this bullish order block. We see this area of liquidity up here. Could be a draw here. We would draw this out over time as a potential sell side imbalance. Keep in mind, we don't know it's there. It's just blank space yet, right? We see short-term high, short-term high, short-term relative equal highs. So our first area of liquidity would be here, and we're looking for, and we saw bullish order block get taken here, bullish order block here, relative equal lows here, right? So there's not much else that we see. Price is already traded. It's taken out sell stops here, proven that it could not continue lower, and we've traded up in London. So what happens here? So in London's price action, we see that we traded down to a fair value gap, traded to the high of a bullish order block, and we continued higher. And now we traded down to this bullish order block, continued, took out a short-term low, and now are now heading higher. So we were always thinking, our bias was always such that, hey, London created a low and continued forward. Likely New York is a continuation as well. And of course, we see it continue higher throughout the rest of the morning. And we see price come back down. Oops, let me see if I can properly do this. We see price come back down to fill out a bullish order block at 8:30 in the morning. We hadn't traded to it yet. So we see it come down to this 15-minute order block. So we will call this a sell side liquidity, because sell stops is where we would engage to buy long. So we'll mark that there so we have it for lower time frame, right? We see that price traded up to these relative equal highs, comes down, treats that as a mitigation, continues higher, hits this area here, spikes up, gets everyone out before it moves higher. It actually goes all the way down to, what would this be considered? From swing low to swing high. Goes down to equilibrium, exactly. So let's mark that out as well. Equilibrium right here. We'll mark that out just a little bit further here. And we'll give it the equilibrium, good old equilibrium, black lines. And continues higher for the rest of the day, respecting consequent encroachment or mean threshold of these order blocks, and continues higher. Ultimately, targeting this sell side imbalance and, of course, relative equal highs from back here. Now, if we go back to the hourly chart, we can kind of see that we would have also, or should have also seen that these were relative equal highs roughly around here, because this is a rejection block. So that's what would have made sense to have. And of course, this short-term high would be the next one here. But this is what it looks like on the 15-minute chart, right? So all these levels, before price even trades beyond 7 o'clock a.m., all of these levels could have already been there, right? Whether they are on the 15-minute or if they're on an hourly chart, all these could have been there and properly annotated in your books to trade up to. And you are now looking for price to either take out sell stops or respect bullish order blocks here. Because this one was not respected, it made sense once it traded down to here for us to take it higher. Let's go down to a 5-minute and see how this looks. So we have price action. We're going to go take it to 7 a.m., similar to how we did before. We see yesterday's price action. Nothing too much changed on the 5-minute. Relative equal highs still suspect here. We start to see lows taken out by those sell stops. And we see in London takes this out. We see we missed this fair value gap institutional order flow entry right here. So what do we see at London? Or what do we see as we creeps over to New York Open? We see this bullish order block created, consolidation, accumulation, order block, impulse move higher, fair value gap. So immediately we are marking this out here as a buy side imbalance. We don't know anything about what's going to happen next, right? But because we see that impulse move higher right there, we want to mark that out and make sure we have that available. And we would start by putting a buy order right there in case we get a movement there. So if we set a buy order here at 15854.75, this 8:30 a.m. candle would have hit a low of 849. So 854 to 849, that's about 6 points total of drawdown. We would have hit it, and immediately within minutes, 15 minutes, you would have been able to go from 55 to 65, 75, 85, 95, even higher. And you would have probably taken profit at 85, honestly, because that's already 30 some points there. You would have taken a point here and then started to potentially scale out at each one of these highs there. Now that's on the 5-minute. Let's go down to a 1-minute time frame. This is what we see and what we're looking at across a lot of our charts, okay? This is what we look at typically throughout the day. So remember, this is London. Remember, we weren't awake to get this, but comes 7 o'clock a.m. What are we looking for now? Well, we don't see much here. We see consolidation here, consolidation, and we see our first impulse move higher. Boom. And we see this on the 5-minute chart. And now we're on the 1-minute chart here. We see price came down into this fair value gap. We could take that, potentially. We could take that high of that low of 15,857. 847 at least would have been our stop. And what does price do at 8:30 a.m.? It goes all the way down to a low of 849. So we would still not have been stopped out there, but that would have been at least our stop out point. And potentially it goes down into this bullish order block here. So even if we didn't get the perfect entry, even if we only chose the re-entry here and maybe a average in here, we would not have gotten stopped out if we leave our stop where it is at on a good trade. So from there, we of course see it continues. We don't know this is equilibrium yet, so we don't have this on our chart yet, but we just know that it's going to continue forward, right? At the bell, we see that it comes back down, takes out sell side, sell side, sell side. Did not take out this sell side completely, but continues forward. So that's solid 30-point drop and that would have been scary, right? You would have been tempted to raise your stop loss even to here. But if you didn't raise it too quickly, you wouldn't have gotten stopped out. But maybe this run would have stopped you out. This whole run here would have been quite scary, honestly. But had you been scaling out, you would have been, for the most part, out. I think I would have probably gotten taken out with that. And then, of course, we know what happens the rest of the day. It continues forward. This run from 15,982 down to 15,888, that's a huge run. And this would have taken a large portion of people out, honestly. I think that's a good lesson in terms of making sure we're taking profits, but not trailing our stops up too aggressively. Now, we could have, even if we got stopped out here, we could have potentially treated this as an area of entry. Would we have thought so at the time? I mean, this would have been, I would have kind of seen this as a potential short if we headed back down here, but and that would have gotten some people short right there. But the thing is this, it wouldn't have stayed very well. We would have seen this consolidation, and then we would see a breakout here and continuation. So at some point, though, we end up seeing us take this much higher, and you know, even though we have this equilibrium point there, we don't really know. We don't really truly know that this is the midpoint from this low to this high. We don't know this at all. Right? I forget where I found that swing low to swing high, but I think this is not very relevant here. I think it might have been on the 60-minute. So either way, that's what we would have seen, and likely we would have gotten stopped out on one of the, I think it was on the 5-minute. Likely this probably would have stopped us out. That's a huge run lower. I mean, if you went long here, I mean, we would have gotten most of our position out by this time and trailed it up here. And we would not have known that this is going to head higher, honestly. We know that it possibly could. We could start to see evidence of that, but it would have been quite difficult. We would need to be constantly reading and paying attention. So yeah, I think that is how I would have charted the day had I had cleaner charts. So I'm going to go through and remove all of these annotations here that are on the lower time frame for now. And so that way I can have a clean chart for tomorrow. And these are all on the hourly time frame here, of course. And this is already traded to, so we're going to keep that there. And we'll go to the 60-minute chart. See if there's anything else that was unclean. So yeah, we'll leave this here. We can remove this here as well. And that will be it. We'll have a clean chart going into the day. So with that, I'll go ahead and conclude today's lesson, part 2 of charting, but charting more effectively. So one thing I didn't bring your attention to, but hopefully you caught on to it. Let me go back to the charts real quick. One thing I didn't pay much attention to on these charts is that we have now kept the main swing highs and swing lows as blue colors and brownish colors. Reason why I want to do that is I want to see what happens when we take out a short-term low here, relative equal lows. When we take that out and trade higher, I want to see what happens at these short-term highs, right? Do we come back down and immediately ricochet? Do we immediately reject and come back lower? Well, we know this is a market structure shift when this trades up it, through, to it, and through this short-term high. And even this short-term high here counts as well on the daily. So we know that, and this is probably one that we can mark out, but that happens to be a discount low as well. But this short-term low here, we could see that we traded up it through it, and we traded through it on the daily. So now market structure has shifted. We saw a very minimal movement back down to take out short-term lows, whereas when we were potentially expecting a drawback down to here, we didn't see that. We saw continued bullishness, and we traded through a second short-term high here, continued bullishness, until we almost traded to a monthly intermediate term high and started to reject here. And now we see consolidation around this point in time. So we need to see whether or not we'll trade below this short-term low or short-term high and hold below there. So we'll start to see some of our daily levels. We'll start to keep those in mind to see if we trade through them and respect them. If so, that means we'll truly have seen our market structure shift. So hopefully this has been insightful to you. This is something that I myself I'm going back through the basics, because every time I have some days that are inconsistent in trading, I want to go back to the basics and take a look and see what am I forgetting, what if I've been spent a little bit too far away from, and see how I can go back to the days where my trading was clean, crystal clear, and I was able to tell where I wanted to go. So with that, well, this concludes the second part 2 of clean chart trading and why I'm going to look for certain buy side liquidity or swing highs and swing lows, and how those color coordinations can help me visually cue when I'm approaching a short-term high on any level, be it daily, weekly, or monthly. Okay. So with that, we'll conclude, and hope you found this interesting. If you like this or you want more of it, if you have some suggestions, just drop them in the comments below. I read every single comment and respond to that as well if I can. And yeah, always looking forward to continuing to grow and get better. So hope you found this insightful. If you did, give it a like and a share if you want to share it with somebody. But for the most part, I will continue recording price action live even if I'm working 9 to 5, my 9 to 5 job, I'll continue recording, and I'll from time to time we'll revisit this type of charting. I think there's a desire for me to chart E-mini as well. So I might do that in a separate video. This one's a little bit long, but maybe I'll do a nightcap video for E-mini over the weekend so that we can get a sense of where E-mini might go in the intermediate term of December as well. So if you find that, yeah, I mean, that's really it. Hope you enjoyed this, and we will catch up soon in the next video. See you on one of the lives or one of the market prep sessions every single night at 9:30 p.m. Eastern. I'm prepping for markets, so you can find me there. You can find me on Twitter. If you DM me or at me, just let me know. Otherwise, I'm on YouTube pretty much every day. I'm sometimes not here physically. I'm just recording the price action so I can come back and study it. But for anyone who's new, you already know that. Or for anyone who's been here, you already know that. For anyone who's new, you might wonder, why am I not live trading? Well, that's the reason why. I'm not physically here on Tuesdays and Thursdays, so I can't trade. So my development is a little bit longer than many who can trade every day or look at price action every day and study it, but so be it, right? So with that, we'll do more of these in the future. If you find it helpful, maybe once a month we can go through this and clean up the charts. But yeah, so with that, I'm going to stop recording here. Thank you very much for listening, and check out some other videos if you want to. Let me know if you have any questions in the comments, tag me, and I will respond. So take care. Thanks for listening, and we'll catch up soon on the next one.